Hey there, traders. This is Shane from NetPicks here, and I'm going to cover this week's trading using the SST. And I'm going to. The reason I'm recording this is there's a few little nuances that I like to do, and I'm going to pass those along in this video. And I'm going to try to get through all of them. You know, I have a lot to say, and I don't want this video to go on for too long. So you know what? Let's just stop talking right now and just get the ball rolling. I'm going to start off with the Euro US dollar. And Monday was no trade day for me. There's a US bank holiday, and I took the day off, as I'm sure many of you did. And start time is 9:30 New York time. Okay, just to get those parameters out of the way here. And remember, you know, I do like to look at higher time frames. That's just you know, a little thing I like to do. And every trader is going to trade things different. That's just as proven over time, no matter what strategy I trade. It just increases my odds a little bit. Yes, it can filter out some trades that, you know, go on to be very, very good. But at the same time, it can also, you know, the exact opposite. It could filter you out trades that don't go anywhere. So let's just walk through. First, we're going to look at here is the Euro US dollar 5-minute chart. And this is the 18th. And what we're going to see here is we come in at 9:20. There's already a trade set up, full target winner right here, the basic setup, which occurs right after the reversal type trade. And I didn't get any of these, you know, full winner. I didn't take it because my start time was 9:30. Now, even though we do have a built-in trailing aspect in the SST, I like to put the odds in my favor. And in order for me to trail my stop, there's got to be some running room. And what I'm going to show you on the higher time frame of this Euro US dollar chart is what's happened here is there's been a range and price broke out. And as the short set up, it was actually shorting right back in to the range breakout. And let me just bring that up, and I'll show you why for me it was a no scaling opportunity, trailing opportunity. I always say those things backwards. You can see right here, we had some basing going sideways here. I had to clear my throat, sorry. And then price broke out of it, and you can see this little spike up here. A lot of selling came in on this area right here. Same sort of thing happened here as well. And when we started shorting, we're going to be shorting right into this mess right here. So we'd have to break through all this to get this running room right here in order to make it a really decent trailing opportunity. Now, quite frankly, this could have been a tremendous trailing opportunity. We could have had a trend reversal right here. But I'm just looking at the probabilities. Okay, so what happens here is we have our reversal setup. Now, I like these reversal setups after these kind of moves. I'm a big fan of these reversal setups. And the entry price is at 34.18, and you can see there's really no reason here to make any sort of adjustments. There's adjustments right around here as well. But then again, you know, I've talked about this in other videos that when you start making adjustments, you could be adjusting yourself into bigger messes. And who wants to do that? I know I don't. So sometimes you're going to adjust, sometimes you're not. And you know, as you progress further in your trading career, you'll find out you know, these little nuances for yourself as well. So 34.18 is the area to short at. We see our 1x down here, and this is where the 2x ends up. Well, 2.3 I believe it is, or 2.3x or something like that. And the problem is, you know, this trade does really, really well. It gives you enough time to get in the market, and it starts late, right? This is like 10:30 when we get our first setup. You know, that's what we were playing with. We get our first setup right here at 34.18 at 10:35. There's no reason why you would not take this trade, really. And it drops nicely, but then look what happens right here. We get these reversal candles. Price fires back up. So you want to be, and it just misses the full target here at 33.78. It comes down to a low of 33.79, just a pip above that, which is always rough. So when this happens, you know, you've heard it over and over again: trade for profit, trade for profit, trade for profit, and that's exactly what you want to do in this instance right here. And this was a 26 pip winner. Now, because there was no scale out, because there was no trailing involved for me, it's a full 26 pip winner, which is nice. And we do get a comeback around here, and then we're getting to 11 o'clock time right here. So this is a really solid trade, and the point of this trade is just that, you know, sometimes there's really great opportunities to trail, and you could have seen it right here, you know, shorting into this. You know, maybe you didn't need a higher time frame, but that's just what I'm used to doing. You can see it right here. Now, before I move on from this, another pair that I look at is the pound US 233 tick, and I don't trade that every day. It's for me, it's going to depend on where the markets are in other pairs. Sometimes you just get you have too much going on and you start making mistakes, and that can really happen in the spot forex, the way some of these markets can move. So when there's an opportunity in one, I generally won't really look at the other one. I say generally because, you know, that can change. Every day is a little different day, and I do put, you know, some art into my trading. But there is a nice trade setup here on the pound US right here, 933 from 6009. There was an adjustment up here, 6015. That's a pretty big adjustment right here. What may help you out here in this kind of scenario is this. We have a nice move up. We put a swing high in here. We got a swing low. Well, this swing low doesn't break lower than this one. So this tells you right now that it could be the beginning of an up move. All right, so there's nothing wrong with taking this trade at all. That's 6009. And let me just take a look here. One thing I pointed out in one of my other videos is if you're getting these kind of setups, now this is just me, okay? This is stuff you could just, you know, take a look at and go, nah, that's not for me. You know, it's too complicated or whatever. And that's cool. You know, these are food for thoughts, but this is how I like to trade things. Is when you get these kind of setups right here, if it's really close, I like to go for the higher one, just because if it's like actually, you know what? I got an example of that. I'll show that later. But here's a trade right here, 6009 to 6028. Pretty painless trade, right? You're basically in this trade and to profit pretty quick. So that's a good trade. That's a good trade. Didn't take it. I didn't take it, but yeah, it was there. And let's move on. All right, so we're going to look at the 19th here, and I just want to show you what I'm looking at here on the 60-minute chart. Like I said before, you don't have to do this. Okay, this is for me. What we see here is this candle here comes out of nowhere, right? It comes out of this little basing area right here. And what does this tell you? There's a lot of buyers in this market. And when it starts coming back down here, you know, you tell me, you know, just by looking at this, is there a decent trailing opportunity? And for me, once again, it's not a place that I want to trail my stop when I get a setup in this area on my lower time frame chart. Okay, and this is where the setup's going to be right here. Now, here's the thing. This is what I want to show you. This actually sets up at 9:05. This trade right here comes back around. It comes off the table as we get closes above these trigger lines, right? We come back around here at 35:03. We also have the setup here at 34.98. This is what I want to talk about. You got this setup right here at 35.03, right above the key level 3,500. Plus this swing level right here, plus this swing level right here. Don't want to adjust too much, obviously, but this setup here is the one I took. Obvious reasons why. We've got a swing high here. This low is a higher low than this, right? Swing lower high than this high. And in order for this to, you know, start a down move, it's got to break this low. Well, this is where this comes in, right? 34.98. Problem was I got stopped out on this trade right here, and it got me 14 pips on this. This might not be exactly where the stop is when I did it, but you know, I do this in real time when I'm trading, move my stops down and mark it off like this. So what happens on this trade? If you took this one here, you would have made this adjustment anyhow, right? And I go with these parameters right here, and you can see what happened again. It just barely hit my area right here. This video was going to be made. I was going to make it throughout the week. Things just, you know, got out of hand, so I kind of forget sometimes why I put certain lines in here. I remember on the day, but then I end up forgetting. It could be where I was expecting a bounce just because of the move. But anyhow, so get a 14 on here, and if you took it from here, you'd make this adjustment anyways, and you would have got 34.73 from 34. 98 or 97 depending on your adjustment. So these are the adjustments that make sense, and this is the art of trading, right? If you're not making these adjustments and you're saying the strategy doesn't work, it's not the strategy that's not working, it's you that's not working, it's you that's not doing the work, which is making these swings. These are covered ad nauseum in the videos. I know Troy does it in the room, he does it on his videos as well. Ron does it on the swing trading videos. These adjustments, these will save you. All right, so if you're not making them and you're not getting the results you want, there's only one place that finger should be pointing, and that's right at yourself. Okay, so this is a decent trade, but once again, as I showed you on the 60-minute chart, it was not an area that I was interested in trailing my stop, unfortunately, or fortunately, however you want to look at it. Now, before I move on, I just want to show the 19th. This is the pound US 60-minute chart. And this is the candle that closes at 9 o'clock right here. It's this big thrusting green one. And this is what I'm looking at when I'm coming in at 9:30, right? And I'm looking where this traded up into. It traded up into this little mess up in here. You can see what's happening here. The market is just flopping around. Got this really huge wick right here from 59.50 basically all the way up to 59.89. And then this candle here, this 8 o'clock candle, this 9 o'clock candle. You can see what we're doing. If you're taking shorts into this area right here, where there's a lot of buying in here. So this is basically one of those days that you look at the charts and you kind of go, well, you know what? The price action is telling me that this is not a day that I'm looking at the pound US. The euro US looked a heck of a lot better to trade. And that's what happened. Now, there was some trades that set up in the pound US. Quite a few of them. Let me just see here. You've got one at 944. That you'll be able to adjust your stop. You've got one here at 59.85 that comes off the table, and you got a reversal, which doesn't happen here. I mean, another setup right here. And then we've got this other one right here at 59.80, but you've got this swing level that the price couldn't make above, so maybe you adjusted around it. If you got in this trade here, you do get some love on this trade, which will allow you to start adjusting your risk, your stop. So you can see that even in some pretty crappy days, you're going to be able to adjust your stops. You can see these. Get down to the 1X. Look at the trade plan for the pound US 233 tick, right? What does it tell you to do? So even though you got stuck in this chop, you still had opportunities to move your stop, and that is the key with the SST, right? That is the key, is to be able to cut your risk as fast as you can when it makes sense, obviously. And that's what happens here. You get up to the 1X here. Right, and it's a couple of pips above, right? What's this? This is a high of 59.93. Now you're going into the big round number of 6,000, right? So that should be cluing you in on something. You're going long into that big key level, so you're pretty aggressive, I would think, in your stop adjustment here. So even if you traded the pound US 233 tick, you didn't lose anything. So that's good news. All right, let's head back to the euro US for the 20th. So once again, you can see my 60-minute euro US chart, and this is the 9 o'clock candle right here on the 20th, and this candle closes. You can see what kind of price action we got here. Small candles, and then big candles, and then small. It's kind of a messy market to trade, but there was room to the upside here, even though it'd be going long into this area, which is a supply area. There was still some room to run up into this one. And we'll cover that trade in a second. And then got some breakdowns here into this level right here. Let's just look at the chart, and then this just gives you the bigger picture, which I'm a big fan of. So this is what we got. I got break even on this trade here. It's a 935. Entry price is at 34.63. No key levels to adjust around, right? There's no swings to adjust around. But here's the thing, and you can see this on the 60-minute chart as well, right? Look at this big area that you're going along into. All right. This is one of the deals when you trade spot forex. Got to watch this, especially in these lower time frames, 5-minute charts, especially the euro US dollar, which is one of the heaviest. That is the heaviest traded pair. Is this an area, and this is where the art of trading is going to come into? Okay, yeah, certainly the price can rally out through here, but let's look. What are we looking at here? We're looking at entry price at 34.62. Okay, so at best we're looking at 40 pips before we hit the key round number of 3,500, right? But we're also going long into this big messy area right here where price just got rejected from. So is this an area that you want to, go for the bigger move? Probably not. this trade actually gets nice and close up to here, and ends up break even. It's a little bit plus spread. Spread on the Euro US where I trade is 0.9, so I make a little bit of profit on here. But I just call it break even. I don't even bother counting that. And then this little note I had myself, zero trail, and we're going to come back around here, and here we go. Entry price at 34.53. Now, what just came out of your mouth? I hope it was, well, I got to adjust around that 50 level. And as you adjust around that 50 level, you adjust right down to this little swing level here is at 46. So what did I do? This is my entry price right here was down where this green line is. Even though I knew it was coming into here, but I was thinking this, price had rallied up into this area, got rejected, pretty close to the 3,500 letter. I was pretty comfortable with taking a short position, but when I showed you the 60-minute chart, you could see there was not a whole lot of room to run. Hence the word zero trail. Here's the entry price. Here's a target that we're looking for. Price comes down, and these are just where I start moving my stop. They may not be right up to date, because when the market's moving and you're looking at your charts and have your trading platform, you're not going to be this exact moving your stops. That's just my visual, so I don't want to have to look at my my platform. But anyways, you get right down here, so it's really a no-brainer, this trade here. This is a plus 25 on this trade right here. Nice and painful, pain-free. And it was just, I remember watching this candle coming down and thinking, oh, this is nice, this is nice, this is nice. So good trade, and very happy with that. You do come around here, but again, why go for more? And I always say this when you're trading the Forex markets, or I guess any market, you're looking at 25 pips, but like I tell people, it doesn't matter how many pips. What matters is how much each of those pips are worth, and that's key. If you're trading 2 standard lots, do the math. You're trading 1 standard lot, do the math. You're trading mini accounts, 5 minis. That's still a really good day. So why keep on going back and forth, when you don't really have to? Get in, get out, get done. That's the mantra from the one of their strategies, right? And besides, the longer term chart really wasn't telling you much. And like I keep on saying, you do not have to even bother looking at the longer term charts. Okay, that's just something that I've done since day one. Okay. All right, now here's the pound US chart for the same day, the 20th, and I'm going to show you that I don't just say these things, that I actually, if I'm looking at this area right here, I'm actually trading off of these areas as well. And is this a day that you'd look for a runner? Well, sure, why not? You've got this nice move down here. There wasn't much to stop your trade, right? You got this little cluster right here, but this is a nice move down right here. Let's bring up the chart and we'll just take a quick little look at what was present. NT means no trail for a long trade. If you see these lines here, these lines are just marking off highs and low of the previous days usually. This one here might have just been, like I said, when I'm trading, I don't know. It's probably just a support or a supply level, something. Anyhow, actually this means no trade. There was a, this is at 9:41. We come into the market here. No trade, comes back around, pulls down, doesn't trigger in, comes back around. Now this is what I'm talking about. You've got this level here at 59.22, and this trade at 59.27, right? If you can see, well, you can see this wick on this chart right here. You want to adjust around those wicks, all right? Those wicks are there for a reason. And it's interesting enough, you'll see the market drops here, kind of bases in this area right here, and then drops further, tries to come back up and runs smack dab into this level right here. Now you know why I'm a big fan of higher time frames, because it really smooths these out so you can really see these levels, because these levels are meaningful. And if you look back at the owner's webinar that we had, I think I hopefully proved my point on that. Anyhow, since this trade was not going anywhere, come back around here for a short trade right here. And once again, you got these levels here adjusting around, but when you start looking at the charts, you can see these moves down here, These aren't small little moves, right? These are pretty, you kind of know what's going on right here. And this is at 9:53, and I just want to show you that if you just take a quick look at the higher time frame, you can see what's happening here, right? Even though you get these long setups, you're getting these long setups right in these little wick areas right here. And well, for me, that's it's a no-brainer what you're going to do on those. If you can adjust around those, great. But you can see right here, it's kind of a messy chart, right? It's messy. Anyways, let's see what happens here. There was news coming out, I believe. This trade actually gets triggered in before the news comes out, so you're riding this trade down. And this is here's a final exit right here. Is at 64 pips. So you get these move down here, 9:53. You're basically in this trade before the news even comes out. So news really helped fuel this one, and it's a 22 pip trade into this area right here. Entry price on this is 59.24. I have to look back to see if I made an adjustment around here. That looks like it'd be too big of an adjustment to make, actually. Anyways, price comes down. Red line is my stop. And even though the stop gets printed right here, because remember, you get to, when you get these other setups, you can use these as stops, right? This is at 59.01. Right, well, what can usually happen at those key levels is little spikes above. So this stop is just a little bit higher than that. Right? Once again, that stuff's all covered in the trading. That's for sure. And in the live, we do get an add-on trade here, which I do not take. I did not take this add-on trade. Right? Full disclosure, didn't take it. Move down here. And I'm going to highlight something here. We get some basing right here. See the market drops, goes sideways, right? Then we get a stop. Well, it's actually a trade to go the opposite direction. And we use these as stops sometimes, right? But this is where I like to look at the chart. Right? What's the chart telling you? It's basing. So what's this? It's going to be a breakout trade, right? The stop is placed just above the basing. These candles are not that big, right? You can see that they're kind of indecision kind of candles. Got these little dojis and stuff like that. Basis. So if it breaks above by any stretch, you're going to be on that trade anyways. So the basing level was about 70, and stop was at 74. So you stay in that trade. Use these basing levels as well. And even though you do get stops printed, I'm a big believer in using the chart action if it's available. Sometimes it's not going to be there. You're not going to see it, right? For example, let's say you get a stop printed in this area right here, for example. There's not one here, but if there was, there's a swing level here. And no, be honest, we're looking at 233 tick. These swing levels on 233 tick are nothing. Another, well, this, I guess, the stop got moved again. We got some basing here. Stop moves here. Basing again, and once again, these arrows are highlighting where these reversals are coming in at 58.53. But here's where the stop is, which doesn't make any sense on my chart here. Actually, 58.55 is the top of the basing, and 58.66, 64. So I'm trying to remember why it's in this area right here. 58.55. Yeah, it's probably because this market based kind of rallied up, dropped a little bit right here, right? 50.55. I want to, right? You want to give yourself room, especially at 233 tick. But like I said, sometimes when I do this kind of stuff, I can't remember why I do certain things. But it would be nice if I left a stop right here because I would have made some more profit on this trade. But this is where the stop actually was. I did move it down here. I want to take a quick look back at my my broker record of trades. I forgot what the word was I was looking for. It's at 59 was the exit price on this trade, and it's obviously because the basing was 0 and it was some pips above that. So that's why that was there. It was bugging me why that was there. Anyways, like I said, when you put some art into trading, a lot of stuff can be mechanical, but at the same time, you want to really try to put a little bit more, not a little bit more, but when you're getting these kind of chart patterns, like the basing kind of patterns or the swing up and the move down, use these actual market structure points to manage your trades. All right, let's go into Friday. And actually, before I go into Friday, I just wanted to show something here. That when I mark these off, they're not just looking at those. I already messed up this trade though. I gotta tell you, me just take a look here. Let me try to move this thing up in here. 1 second here. Anyways, I'm trying to get I took a screen capture of a long off this area. Just for disclosure that I don't just put these on and say, well, this is what happened. But I've upgraded to the new Camtasia. I can't drag this thing up into here. But quite frankly, what I was looking for was the price fell into this area right here. I went long at, let me see if I can bring this up. There we go. That works. Right here. It was long here. And my ultimate price target was set up here where price eventually went to. However, I was a little bit too aggressive with my stop, but you can see right here. Because what happened was, this was at night, last night before I went to bed, prices based here, rallied up, right? I put my stop just below the base, went to bed, woke up with the spike down, which happened around 4:30 this morning, and then of course, price goes on its merry way. Note to self is just leave it alone next time. But it is what it is. So, but I just wanted to show that just so you know that when I say these things, it's not just like a lot of other companies out there that say things, but don't put their foot forward. Anyhow, let's keep going forward. All right, once again, 60-minute chart of the Euro US dollar for me. This is an area that if you look back, if I scroll back, how far? This is especially this area right here is a pretty big area. You can see what price kind of based and dropped pretty strong from this area. So I was a little bit, the odds were not as in my favor. Now prices rallied up into it almost, well, looks like it's just starting to break through right now. Above the 3600 level. So we'll see what happens after that. But my point is this. When I came into the market, we're looking around this time right here. Right here. And this is a price where price had, an area where price had fallen pretty strong from. So I wasn't too keen on the Euro US dollar today. But we'll take a quick little look and we'll see what happened. Now remember, there was no news today. Okay. And Euro US dollar it did well. If you were taking the Euro US dollar trades today, you wouldn't have got this one. You have this one coming in right here at 35.68. Let's see what happens here. You might have got taken out on a trailing opportunity or not, depending on how you're doing it. And but if you didn't, 35.67. No, it's a nice trade. 3600 going long. We'll see what happens up in here. You never know. But for me, the odds were not in my favor, and the pound US just had, I was already was in a trade for the pound US, so I was pretty happy to keep on trading that. So let's bring up the pound US for today. Now, for the pound US, I was pretty happy with shorting. A little bit weary of taking long positions today, just because of, like I pointed out, the whole week it's been kind of in this pretty lousy area right here, and up into an area where price had come up before and dropped nicely in this area, this whole area right here. It's broken above now. Now it's in this zone again. It's very, very ugly. A lot of spike moves here. However, if you look here, these candles here, what they do is they do give you some room to the short side for trailing opportunities. Okay, now this wick doesn't come in till later. Right here. Where are we here? All right, so we come in. Keep note of these areas right here. This is at 9 o'clock, but you see it's just kind of chopping around. You can see the chop when you come in at 9:30. You can see it, right? These are levels that you really want to be concerned about, especially when they're rallying up like this. And where's it rallying up to? Right into the key level of 1.600. So, are you going to be taking long trades? You could try it, but not for me. And the chart that I was looking at, the 60-minute chart, told me a story. Here are the areas where you want to keep in mind. Swing levels, right? I know these are all covered. And entry price of 5,979. However, I wanted to get below these ones, and I've actually put a little arrow here and a line here. Remind myself. That's good. So 59.76. Price came down to the 2x. Kind of went down here a little bit further, but it was 16 pips. Now, I would have liked to have trailed this, and like I pointed out here, I wanted to trail because it had some nice room to run to the short side, right? The odds were pretty decent. Yes, it did rally up pretty far into this area right here, but for me, it was okay to try to trail today. Well, the market had different ideas, and what I want to point out is sometimes when you look at the size of these candles, these are pretty big candles, right? And when these reversals set up, I made a little note that there's room to the upside. And what I mean by that is there's really nothing to stop the market from flying back up. These are all sell, 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 right? There is room to the upside on these trades to go north, right? So there wasn't like a big pocket of, choppy crap right here that you'd be trading into. You're basically trading into what we like to call a path of least resistance, right? There really was none. Down below, there's some mess here. And I believe this was the low of the day before. I can't remember. Anyways, you got some room to the upside. Now, if you took this trade, which I did not, so you would have banked some decent profit here, and then you would have got a nice reversal here at 59.70 to 59.84, right? And however you trail, and then you got the add-on trade at 59.81 right to the pip. So this day could have served up some really nice profit. But for me, I have my way of doing it. So I hope you guys picked up something from the video. Let me just bring up the stats for me and take a look. So looking 7 trades between the pound US and the euro US, trading a very short time frame, 9:30 to 11 o'clock and change, a little bit more depending. Not one loss this week, and 177 gross pips. Just to be, take off 2 pips for each trade, right? So 14 pips in spread. Still a pretty decent week. So hopefully you took something from this video, and I hope you took that number one, that be aware of those areas of to adjust around. That if you get 2 setups, one on top of the other, if it's for pretty close, doesn't hurt to go the other one, especially if it's over top of a swing level. And make sure if you're going to look for trailing opportunities that you look for it in some areas that are clean, and like this one right here, it's kind of choppy. Like, you never know, I guess. That's the whole bottom line. But if you look at the longer term charts here, these are tough markets right now, right? Look at this. That's sideways more than anything, right? With a few little oomps. These candles are all differing sizes. There's not really anything sustained going on. The euro US dollar, what you had a rally base dropping, and then some rallying and mess here, and pullbacks and spikes and wickies, these kind of wicks here and stuff like that. Spot forex is a tough market to trade. It's a tough haul sometimes, but you want to put the odds in your favor, without question. And let's wrap this video up because I'm thinking it's pretty long. All right, thanks for watching.